Build your wealth by buying these 7 things. The key to growing wealth isn't always simply to make more money. Sometimes it's about using what you have to your advantage. There's a saying that goes, "The rich don't work for money. They make money work for them." Wealth building doesn't happen overnight. We need to know where to put our money. Let's take a look at 7 things to buy to watch your wealth grow. Number 7, cryptocurrency. Cryptocurrencies are digital assets people use as investments and for purchases online. You exchange real currency, like dollars, to purchase coins or tokens of a given cryptocurrency. There are many kinds of cryptocurrencies. Bitcoin is the most famous, but Ether, Bitcoin Cash, Litecoin, and Ripple are a few others. You've probably heard of people making hundreds of thousands of dollars by investing in cryptocurrencies. It feels like a modern-day gold rush, but cryptocurrencies have actually been around for about 10 years. Because of how new this form of investing is, cryptocurrency can be very unpredictable. The value of cryptocurrencies goes through extreme ups and downs. In 2017, the value of Bitcoin swung between $900 and $20,000. Someone sneezes and the price drops. Investing in cryptocurrency is risky, to say the least. Of course, all investing carries a degree of risk. So be mindful and learn anything you can before investing in cryptocurrencies. Number 6, secondhand goods. Now this might come as a no-brainer, but anything used is less expensive than the new alternative. Sometimes up to 90% cheaper, but generally at least 50% cheaper. Your dollar will go farther if you start buying used. For example, buying a used DSLR or car will save you more money than going for a brand new product. The biggest reason is because all of these things are liabilities, meaning the value of the product diminishes and can't be resold at a higher value. There are plenty of sites on the web that you can use to buy used goods. eBay and Craigslist are the most popular places to buy secondhand items online. If you're skeptical about that, then there are always garage sales. Take entrepreneur Gary Vaynerchuk, for example. During his free time, he goes around neighborhoods buying Pokemon trading cards or basketball players trading cards for dirt cheap, and then resells them at the market value, which is usually about 50 to 60 times higher than what he paid for. Smart, right? Number 5, stocks. Stocks are one of many possible ways to invest your hard-earned money. Why choose stocks instead of other options, such as bonds, rare coins, or antique sports cars? Quite simple. The reason that savvy investors invest in stocks is that they provide the highest potential returns. And over the long term, no other type of investment tends to perform better. There are several ways to approach stock investing. Generally speaking, to invest in stocks, you need an investment account. For the hands-on types, this usually means a brokerage account. An online brokerage account likely offers your quickest and least expensive path to buying stocks, funds, and a variety of other investments. With a broker, you can open an individual retirement account, also known as an IRA. Or you can open a taxable brokerage account if you're already saving adequately for a retirement elsewhere. Stock investing is filled with intricate strategies and approaches. Yet some of the most successful investors have done little more than stick with the basics. That generally means using funds for the bulk of your portfolio. Warren Buffett has famously said a low-cost S&P 500 index fund is the best investment most Americans can make, and choosing individual stocks only if you believe in the company's potential for long-term growth. Number 4, property. The accurate term would be real estate. The benefits of investing in real estate are numerous. With well-chosen assets, investors can enjoy predictable cash flow, excellent returns, tax advantages, and diversification. And it's possible to leverage real estate to build wealth. Real estate investors make money through rental income. The rental income is mainly through individuals who want to rent out living spaces, or it could be a business that has to pay way higher rents to run their business on a property. Real estate is a distinct asset class that's simple to understand and can enhance the risk and return profile of an investor's portfolio. On its own, real estate offers cash flow, tax breaks, equity building, competitive risk-adjusting returns, and a hedge against inflation. Here's a little tip for you. If you're looking to buy a property right now, when a recession hits or is about to hit, you know it's a good time to invest in real estate. Some people are surprised to hear this, but it's true. It's because recessions create very motivated home sellers. Number 3, intellectual properties. Intellectual property represents an important financial and legal asset for companies, including startups. It is often estimated that intellectual property accounts for more than 80% of a company's value. The biggest example of intellectual property is Coca-Cola. Now, the brand is worth millions, but the intellectual property of Coca-Cola is worth billions of dollars. In this case, the intellectual property is the recipe for creating the fizzy drink. Pretty fascinating, isn't it? Apple had to pay $60 million for the iPad trademark in China because another entity had registered it first. Intellectual property works on a first-to-file basis. Even if you are not yet interested in the value of your business or brand, but just want to sell your products, the intellectual property also works as a marketing tool. The R symbol informs the public that the brand owner believes in this product and does not want competitors to ride on its reputation. Patent-pending statements in marketing give a message about the product's innovativeness by indicating that the appearance of the product or its detail is a protected design. You make it clear that the product represents increasing individuality and stands out from the mass. Number 2, precious metals. Usually, when people discuss investing in precious metals, they're talking about buying and selling gold, silver, and/or platinum. This investment takes two forms. Sometimes, people will buy the physical metal and store it somewhere privately. For example, people will often purchase gold and/or silver coins and keep them in their safe or in their safe deposit box at their bank. Another option is to buy a precious metal ETF, which stands for Exchange Trade Fund. Essentially, this means you're buying a stock whose price is tied to the current value of that precious metal, usually meaning that the ETF represents ownership of some small amount of that metal. If the value of the metal goes up, the value of the ETF goes up. There are a couple of reasons to look into investing in precious metals. 1. It's a physical commodity. If you own gold, you actually own a piece of that precious metal. This is opposed to things like a share of stock, which only exists on paper. 2. It's a limited commodity. There's not an overabundance of any precious metal in the world. Yes, there is some more mined all the time, but the total quantity isn't growing at a very rapid rate. Number 1, audience. All right, hear me out. Have a look at the big company events like Apple, Samsung, Xbox, or even sporting events like the NFL. The companies could just release their products in a conventional way. The sports franchises could just play their games in a closed stadium and decide which team is the best, but they don't. They invest in huge stadiums and theaters. They want people to come and watch. They are investing in an audience. When you invest in an audience and provide them with valuable content, you get a group of people who want to hear from you on a continual basis. They want to interact with you. Now, investing in an audience has become way easier than it sounds. In the old ways, you would have to advertise in the newspaper or in billboards, or print flyers and distribute them. Or if you could spend a little bit more, you would advertise on TV. It's a completely different story nowadays. In the prime of social media, you have the option to open a business account on Instagram, for example, and pay the Instagram algorithm to promote your account for a specified number of days. You can also customize your advertisement to a specified target audience, or you could pay an influencer who has a large number of followers to do the work for you. Trust me, having 100 loyal customers is way better than having a lot of one-time customers. Spending on stuff we don't need is easy. I know social media says we deserve those sneakers or that handbag for our hard work, but the truth is we deserve to be debt-free and financially independent. Like this video? Drop a like, subscribe, and hit the notification bell for more life-changing content like this. Thanks for watching.